Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you here this morning as we are going to be taking another fresh new look into the financial market using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential of the market price trajectory for today's trading session. And I've seen quite a lot of comments in the comment section. I'm enjoying the energy here this morning. I'm glad to have you guys around, from Torres Master to Cyrus Limo, Raja BD, Kelechi, Jonah Aruna. Good morning to you guys, and thank you very much. I'm loving the energy this morning, and today promises to be an interesting session as we are going to be looking at how yesterday went by and what really happened. In fact, we did fairly well to start the week with, though we saw how the USOILSPOT moved significantly well before the bullish momentum came in. Then on the GBPUSD, we had this indecisive phase going on in the market. We are going to be looking at that today too as well. And on the XAUUSD, we had a significant movement of price action yesterday before the buy pressure resumed, and we are also going to be looking at that one today and see how we will be preparing ourselves for today's trading session, especially a day which is laced with a high impactful event from the United States economic docket. So it has been fairly good for us this week so far, and one thing we should also take note is that it's still very early. Today is Tuesday, the second trading day of the week, and we still have quite a lot of days to recover and recoup and in fact make significant amount of profit. So what we are going to be doing today is to see how we can strategically position ourselves for the next move, and I do hope we are all prepared for that. Now, for those who are joining us for the first time, I'm highly glad that you are around with us this morning. Glad to have you around. You are very much welcome. But I'm very sure you will be wondering what this is all about and what is it that we do here during the Forex Morning Mastery. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and the New York session. Now, during the course of the weekend, I usually share a couple of perspective into how I will be getting ready for the new week. Of course, I do share the assets I will be looking at. So the Forex Morning Mastery is an avenue where we come to do follow-up details on these videos and then see how we can position ourselves for the next move. The session kickstarts officially 8:05 a.m. UTC, 9:05 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. Now, you want to know that my aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become in comprehending our analytical approach and utilizing the information you gather here to make your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to engage in the comment section. So with that being said here, let's dive right into the business for today. And as usual, so I'll have to expand this a little bit so that we can see it clearly. I think it's quite all right now. So the first thing we normally do is to check on the economic calendar, and for those of us who have been with me for a while, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for the asset based on the asset we have been monitoring since the beginning of the week, our focus is on the United States and the United Kingdom economic docket. Now, for today, Tuesday, December 12th, we have a handful of high impactful events from both the United States and the United Kingdom economic docket. Now, the first one here, we already had three impactful event from the United Kingdom, which has already been broadcasted already. We had some mixed figure in that regard. So the first one here is the claimant count change. Now, some of us will not know what the claimant count change and how important this is for us as technical traders. Well, this is a United Kingdom economic indicator that measures the monthly change in the number of people claiming unemployment benefits. Now, a higher than expected increase of figure in the claimant count change may indicate economic weakness, as this, of course, is a sign that the labor sector is not doing very, very well and can negatively impact the market sentiment, leading to concerns about the labor market and broader economic conditions. Now, if we look at the data that came in this morning from the claimant count change, you will see that as against the previous month, we had 16,000 and we had consensus projecting 20,300. And what this simply means is that the unemployment has increased from the previous month of October. As you will see, the previous month was at 8,900. So now we have 16,000. That's a whooping gap of about 7 to 8,000 plus, which is not a very, very good sign at all. But it was beyond expectations, actually. As we saw, we were looking at 20,300, but still does not really represent the United Kingdom in a good light here. Then the next one we had was the employment change. The employment change. Now, this measures the net number of jobs added or lost in the United Kingdom over the last month. Now, a higher than expected employment change is generally seen as positive for the United Kingdom economy. Now, look at the data we have here. As against the previous month, we had 54,000 for the month of September, and for the month of October, we have 50,000. So it's not also a good signal at all. Then moving on, we have the higher low unemployment rate, which is a measure of the percentage of the labor force that is employed and actively seeking, that is unemployed, and actively seeking employment. Now, a higher than expected figure here can negatively impact the market sentiment, signaling economic weakness and potential challenges for consumer spending and overall economic growth. Now, let us look at what the data came in this morning. You will see the previous data came in at 4.2%. Consensus were expecting 4.2%, and in fact, the actual data came into as 4.2%. So if we are going to be taking a summary of what is going on from the labor sector in the United Kingdom, it's not something promising at all. And in fact, we begin to see how the market participants are reacting to this data, but we can't jump into conclusion based on the reaction we are seeing in recent times. As you know, we're still looking forward to another high impactful event today, which is the Consumer Price Index. Now, for those of us who don't know what the Consumer Price Index is, well, this is a data that gives us a measure, or let me say that examines the average change in prices paid by consumer for goods and services over time. Now, a higher than expected CPI can lead to concerns about inflation impacting the market sentiment, and as it may prompt expectations of tighter monetary policy to control rising prices. Now, this is one data that the Federal Reserve will be looking forward to, as we all know that we are anticipating the interest rate decision, which is coming up tomorrow. Now, what will happen today is going to be playing a major role in determining if there's going to be another rate hike, or probably the rate will remain unchanged. But there is this general perspective in the market right now that the Federal Reserve is gradually concluding its monetary tightening policy. So we're expecting that rate cut will start as early as the first quarter of next year. But let's see what this data will come up with today, and in fact it's going to be playing a significant role in what the interest rate decision will be for tomorrow. Now, the expectation so far based on the month-on-month and year-on-year is 0.1% and 3.1% respectively, which is of the mixed expectations here. So we will be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectation? Now, as technical traders, you know what we are going to be doing here this morning. We are going to be sniffing through the current market structure from a technical standpoint to see how market participants will be anticipating this event. And of course, you do know that the anticipation of this event alone usually reflects on the chart as price action. So talking about price action, let's dive right into the business and let's see what is really going on in the market so far. Now, the first thing we are going to be doing here this morning is to go into the oil commodity market, and as you all know, it usually takes some time for this to load up. So let's give some couple of seconds while that loads up. And I want to attend to a comment here from Simon Bayon. I hope you're still around. He said here that it's been a rough ride this week on the GBPUSD. The same thing with Cyrus Limo. Now, one thing I would like to say here as regards to that statement, it's more or less like an emotional attachment to your own particular trades. Now, in those kind of scenario, you definitely get exhausted when you are too attached to your trades. Now, when the right opportunity now comes for you, you might not be convinced to actually take that move when it finally happened, because you're already exhausted and attached to your trade. And if you would ask me, why is it that you are complaining about the rough ride? Well, it may be that you are risking too much on your particular trade, and if you are risking too much, you get emotionally imbalanced in such situation. Then it begins to affect you, and you feel probably you are stressed while you're taking the trade. Now, the better perspective is this: you want to mark out your levels on your chart, which you want to be using to guide your decisions for the week. It could be your trend lines, your key levels, your chart patterns. Mark them out on your chart and allow these structures to guide your decisions. No matter what happens, even if it goes into a loss, you are very much fine. And this is where your risk management strategy comes in. What kind of risk are you having on every trade you are taking? Is it a risk that affects your emotions? That's one thing you want to be asking yourself to as well. Are you risking as minimum as possible, so that even when price action does not go your way, you are quite fine and still in the market to trade for another day? So these are things you want to be taking into consideration while you are positioning yourself for the next week. Never get too attached to your trades. Allow your trades to run. Mark out your levels. Place your buy stop or sell stop order, whichever the case may be, and just see the trade to move. So I just wanted to say something about that so that we can all be on the same page here. So the chart has loaded up right now, and the first asset we are looking at this morning is going to be the USOILSPOT. And on the USOILSPOT, in fact, I had the buy position triggered this morning, and it appears price action is going the other way right now, going down to the downside, and in fact I'm in a loss on this particular one right now. So let's quickly run through how the week started for us. Or should we go into that first, or let's talk about the fundamental factors behind the scenes on this particular asset? Now, for those of you who are with me on both my TradingView and Telegram platform, you most definitely have gotten an update as regards to how we are going to be managing the US oil spot for today. And in fact, I did mention that all our sell positions from yesterday was closed. Remember that we had the sell position triggered after price did break down the $71.38 level, and in fact price moved about 83 pips on that first sell position. And then we also had the second position triggered at the $71 level. I did share an update for those of us who are with me on both my TradingView and Telegram platform, and that one also moved about 45 pips, moving a total of 130 pips thereabout before the bullish momentum came in. And of course, I did mention that we should be moving our stop loss to secure that current position, and if you had done that, you must have been taken out from that position with a reasonable amount of profit, or at a worst case scenario break even if you had moved your stop loss to your entry point. Then we saw a couple of attempt by sellers to run through the structure again, which I also took advantage of, but unfortunately it didn't do very well at all, as we saw buy pressure persist, pushing price to the upside, leading into another breakout of the resistance line right there. And at this point we are in a limbo right now, as we do not know what is going to be happening going forward. Price action is back within the range we identified at the beginning of the week, and in fact right now we have a wider range where price is currently confined within the $72 level and the $71 area, to emphasize the level of indecision going on in this particular market. And of course, we are not surprised by this, as we do know that everyone is looking forward to the upcoming release of the US Consumer Price Index data, and of course the Federal Reserve interest rate decision, which is coming up tomorrow. And usually when this kind of events are coming up like this, we usually see this kind of choppy situations happen in the market, where major key players may choose to step aside and wait for clues from this economic event, or prior to the economic event, before making any trading or investment decisions. Now, contrary to the expectations, the growth in the US shale oil operation has surpassed projection, and non-OPEC producers are posting unexpectedly significant gains, and this is not a good signal for the US oil at all. Now, this unanticipated surge in production from sources beyond the OPEC Plus alliance adds an extra layer of complexity to the uncertainty prevailing the crude oil market, and these are things we want to be taking into consideration as well. Now, something I heard from the news yesterday about this recent development in the United States. I think I wrote it down somewhere. I would like to read it out to you guys. So I heard here that the US initiated the purchase of up to 3 million barrels of crude oil for the Strategic Petroleum Reserve, that's the SPR, to the oil market, and this could potentially lead to an increase in demand too as well, and in turn lead to a temporary increase in oil prices. Now, the US SPR, that is the Strategic Petroleum Reserve, hit a 40-year low during the course of this year, and it appears they're trying to replenish this. And where are they going to replenish it from? Of course, from the global market as well, of course. And if this happens, now we learned that they bought 3 million barrels of oil, which will be delivered by March 2024. So this will probably incite some bullish traction in the market, and I think this is one of the reasons why we saw this ascending trend line continue to reject all attempt by the sellers to break through that structure yesterday, hereby allowing our sell positions to fail during yesterday's trading session. So for those who want to know why the bullish momentum gained some traction there, negating all our sell position, this may likely be one of the reasons that this happen. Now, the question going into today's trading session is, will the bullish momentum due to the buy pressure we notice here persist to incite an uptrend situation, or price is likely going to be dropping to the downside? Well, if you look at the structure from a technical standpoint, remember that we identified our key level at the $72 area. Now, for those of you who don't know how we got this level, I would encourage us all to watch my video on the USOILSPOT yesterday, where I did a top-down analysis of this asset from the higher time frame down into the lower time frame, and in there I talked about how we identify that key level and how the level is going to be playing a major role in determining our positioning for this week. If you had missed out, you can check the link right in the description box of this current video to keep yourself updated on that one. So going back into the structure, so we have our key level at the $72 area, and of course you do know how we use our key levels in this community. As long as price remains below the key level, we want to continue to look out for patterns and structures that supports the idea of selling. Now, if price breaks out of the key level, we want to be looking out for patterns and structures that supports the idea of buying that particular asset. Now, something interesting happened last week around this key level. As we saw, price did break down this key level, as you will see here. Then we saw some buy pressure resume during the second half of last week, which more or less was seen as a retracement of that bearish impulsive move. And as you will see, price action is back into that structure, and every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. Now, the same thing also happened a couple of hours ago. Price came into that structure, and again you can see selling pressure resume from that area. Now, the question is, will this selling pressure persist in such a way that price will continue the downtrend situation going further to the downside? Well, we need to understand what is really going on around that $72 area. So right now we are at a crucial juncture. Hold on a second. So we have my stop losses. Okay, stop losses around below the ascending trend line here, and like I said, we already have a buy position triggered at this juncture. As you will see right here, price broke out of this structure, and since then price action has dropped again to the downside. And remember, our stop losses will be right below the ascending trend line, which has been supporting this bullish momentum since last week Thursday. Let me highlight this so that we can see what I'm talking about here. So we have this ascending trend line in place, and you do know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable looking out for buying opportunities. Now, price still remains above the ascending trend line, so there's no reason for us to panic at this point, as price is still in alignment with the structure we projected here yesterday. Now, one thing I will just say here is that we should allow enough breathing space for price action to move around, and the reason is simply because we are at a crucial juncture where buyers need some significant momentum to be able to break out of the structure, and for that to happen, we may likely see some choppy situations happen around here, especially as we anticipate the CPI data today before price action could gain that momentum to push price to the upside. So let's ensure that our stop losses are placed just right below the ascending trend line, which is of course below the $71.38 level, which happens to be the support line of that range we identified at the beginning of the week. Now, with the situation we have right now, we have the buy position triggered, like I said earlier. So let's see how this momentum will go. This current candle here still has about 17 minutes left for it to close. Let's see how it will close and what form or pattern it's going to take when it finally closes. Will it close in form of a bearish engulfing candle? If it does, then chances are that price may likely break down the ascending trend line to incite some selling opportunities. But at this point in time, we still remain very bullish on this particular asset. Let's allow the structure to play out itself And this is where it is always important that you have a well-defined risk management strategy, a risk that is as minimal as possible, that wouldn't affect your emotions when price action goes the opposite way. So let's allow this to play out. We still maintain a bullish bias here. However, in as much as we look out for buying opportunity, you know how we do it in this community. We always want to keep a balanced perspective to whatever decisions we are making. Now, in as much as we are looking out for buying opportunities here, we cannot consider the potentials that sellers who still take over the market. And remember, I mentioned earlier how we are at a crucial juncture, a level which was broken last week, and since then price action appeared to be retesting the structure, and it may incite a bearish move. Now, what is it that will make us feel comfortable joining a bearish opportunity? Well, since I mentioned earlier that we have an ascending trend line that we will be using to guide our trading decision for the week. And one interesting thing about this ascending trend line is the fact that it also shares a confluence with the support line of that range we identified yesterday at the $71.38 level. Now, if price action breaks down the support line, it would also have broken down the ascending trend line, which will be a beautiful signal that we may likely be going to the downside. And if we are lucky enough, a retest of structure will be a very good confirmation to join a bearish momentum to the downside. So this is the only condition that we will be looking at on this current structure to guide any bearish momentum to the downside on this one. So this is my simple perspective on the US All Spot for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, you are welcome, Simon Bayon. I'm very glad you found that useful. So, in the absence of no questions, I want to assume that we are all on the same page, and let's see how this is going to play out. Like I said, we maintain a bullish bias here, and let's see how this is going to play out for today's trading session. And if there is anything new, trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So with that being said, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, and finally we have been taken out of all the buy positions right now. I do hope we moved our stop losses accordingly after price moved very well. Remember, we had this buy position triggered yesterday. We had one move with about 30 pips before the bearish momentum came in. We also had another re-entry happen here, and price action moved again another 26 pips before we saw the situation as sellers push price to the downside. And in fact, remember I did mention earlier that we saw some three economic features coming in from the United Kingdom this morning, which of course gave us an insight into the health situation of the labor sector of the United Kingdom. And from the data there, we had mixed data from the UK employment report, which tells us that the labor sector is not really doing very well at this point in time. And with such a data, such a development ahead of the Bank of England's interest rate decision is not something promising at all, as is might likely negate the idea that Billy said last month that they are likely going to be increasing interest rate one more time. And with the way things are going now, it's not doing very well, and I'm not sure if the Bank of England will want to be increasing interest rate with the situation that it's going on in the economy right now. So this is making the pound sterling not attractive at this point in time. And in the last 2 hours, in fact in the last hour since the report came in, you can see we've been witnessing some engulfing bearish candle to signal that price may likely continue to the downside. So at this juncture, we want to exercise caution and ensure that we remain vigilant using the structures we have on this chart today to guide our independent trading decisions. Now, how do we intend to capitalize on the next move at this point in time? Well, first of all, we want to take note of this ascending trend line we did identify on the higher time frame. Now, for those of you who had watched my video on the GBPUSD, my weekend video on the GBPUSD, you would be familiar with this ascending trend line. And one of the major parameters we said we will be using to guide our trading decisions for this week was this trend line. And you know how we use our trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in a buy position and of course continue to look out for buying opportunities. However, with the recent development in the United Kingdom and in the recent hour, you will see that the market is reacting negatively to this, and it is very likely that sellers could come in at any point in time. Then in addition to that, if you look at what has been going on here since last week, I think price action has been spiraling to the downside, and in fact we had series of lower highs. Look at what we have here. We have lower highs. Remember, if you look at the structure closely, you will see that we had a descending trend line, and this of course further emphasized the strength of the sellers at this point in time. Now we had a couple of breakouts of this descending trend line this week, but despite the breakout of this descending trend line, we had one here on Monday during the first hour of the New York session. We also had another one right here. Now, despite the breakout of this descending trend line, one thing you will notice is that buyers were unable to break out of the previous high at the 1.2590 level. The next attempt to break out failed a couple of hours ago. As you see, we now have a lower high. Now, things are pointing towards a bearish opportunity here. Now, for me to sell, you know what we want to be looking out for. Of course, we want to see price action breach that ascending trend line, that is, break it to the downside and possibly retest it to incite a downtrend scenario. Now, that's the only condition that will make us feel comfortable selling the GBPUSD today. Price breaking down the ascending trend line and, if possible, retest the structure, and then we can be part of a downtrend move here. Now, if price continues to drop to the downside, the breakdown of the support line had the 1.25350. Remember, this is the support line of the range we identified at the beginning of the week. Now, if price will break down the support line as well, we want to be adding more sell positions to our existing trade. Now, remember that we have our key level, which we said we will be using to guide our trading decisions for the week, at the 1.25 area. Now, while we continue to sell, please, I want to encourage us all to be on standby to move our stop losses accordingly. Now, the reason why I want us to be moving our stop losses accordingly is simply because of the fact that price action still remains above that 1.25 level, which happens to be our key level, and in fact that level had played a major role on our higher time frame. Now, let me just show you what is looking like on the 4 hours time frame, how the 1.25 area. Now look at the 1.25 area, look at it here. So if we go to as far back as the month of November, you will see how that level had played a major role in determining the direction of price action. Look at what happened here. It was more of a selling niche. We saw price break out, retest the structure, and since this one happened here during the last week of November, price action had remained above that level. Now, the next attempt by sellers to break through that structure failed on the last trading day of last week, as we saw a sharp rejection of that structure. Now, for the fact that price action still remains above the structure, for me, it still holds the potential that buyers still have a say in this particular market. So even if we are selling the breakdown retest of that ascending trend line I identified on the 1 hour time frame, we want to be very mindful, move our stop losses accordingly as soon as price moves significantly in our direction. And the only condition that will make us feel very, very comfortable in a sell position is for the key level to be broken to the downside. And in fact, a breakdown of the key level would have broken down the major ascending trend line here to make us feel really, really comfortable in a sell position. So while we sell the breakdown of the ascending trend line we identified on the 1 hour time frame, so I'm back into the 1 hour time frame right now. While we sell there, we're still not it's still not a casting stone that price will go to the downside. So we want to make sure that we move our stop losses accordingly, protect our positions while we continue to monitor price action. So breakdown retest of the trend line would be a good opportunity to join a bearish move. Now, to make things easy for us to be able to capitalize on that move, we need a level. We need a level to guide our decisions here. So I think let's look for a psychological level here. So we have the 1.25500 area, and I want to give it a different color so that I will emphasize its importance compared to others. So we have the 1.25500 level. So you do want to be marking out this level on your chart as well. So I'll just give this one to a red color and then place it at the bottom right hand side of our screen. So here we go. So this is what we are looking out for right now. If price can break down the psychological level, price would also have broken down the ascending trend line, hereby welcoming a sell position at this point in time. So let's see how this will play out here. Now at this point, it's looking as if price will go bearish, looking out for the breakdown of the structure. Now, in as much as we are looking out for selling opportunity, what does it take for us to feel comfortable joining a bullish move here? If you would ask me personally, I would rather want to see price action take out the 1.259 at this point in time, and the reason is quite simple. As you will see that since last week Friday, this level had been a strong selling niche, and since the new week began, despite the strong bullish momentum, we can see how this level had continued to negate all attempt by the buyers to break out of that structure. And now the next attempt to even break out closed at a lower high, emphasizing the strength of the sellers at this point. Now, if you would ask me, I would rather want to see price action take out all the sell positions here to give me a level of comfort to join an uptrend situation at this point. So I do have a buy stop order above the 1.259, but if it so happens that we can see significant signals that buyers are still trying to gain some momentum above this ascending trend line, maybe like some series of higher highs and higher lows, we may want to be joining early enough even before the breakout of that structure happened. But if something like that comes up, I will definitely let you know in the comment section of both my TradingView and Telegram platform. So these are my views on the GBPUSD for today's trading session. So we said here that we will be looking out for selling opportunities only at the breakdown retest of both the 1.2550 and the ascending trend line, and we will be looking out for buying opportunities above the structure, and that if we can see some series of higher highs and higher lows, we could probably join even before the breakout of that structure happens. And I do said I will be giving you updates on both my TradingView and Telegram platform. If you have any questions whatsoever as regards to my illustrations, or probably you need some clarification to an aspect you're finding it difficult to understand, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the last asset on our watch list for today. All right, thank you very much, Simon Bayon. Thank you, Torres Master. And Thomas Baladon, good morning to you. Glad to have you around with us this morning. All right, so in the absence of no questions, I want to assume that we are all on the same page here, and in that regard, permit me to move on to the next asset on our watch list. So the next asset on our watch list for today is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And in fact, we have some interesting situation going on right now. And in fact, the gold spot was one of the most profitable, it's the most profitable asset for us this week so far, as we had some sell positions triggered yesterday. Remember, we said we will be selling at the breakdown of the $1,995 level, which actually took about 6 to 7 hours before the bearish traction increased the momentum. Then I did updated us on my TradingView and Telegram platform that we will be adding more sell positions at the breakdown of the $1,991.50 level. Then we also added one more at the breakdown of the $1,981 area. All of this was duly mentioned during our XAUUSD live window yesterday. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on this move. And I do hope we all moved our stop losses accordingly. If you had done so, you must have been taken out with a reasonable amount of profit. So once again, well done to you guys. Now for today's trading session, what is going to be our plans? How do we intend to capitalize on the next momentum? Well, at this point, it appears that selling pressure is easing, as you will see that since the Asian session, price action has been we have been seeing some deep buying, let me call it that way, deep buying. As you will see, this is the lowest point price action has gotten this week. Then we saw an engulfing candle right here. Then we saw some series of higher lows in that regard, which for me is a sign that buyers may probably be gaining some momentum behind the scenes, but we still cannot jump into conclusion yet at this point, as we will want to see something very, very significant that will give us the confidence of even thinking of joining a bullish momentum at this point. However, it is important to state here that market participants may be adopting a cautious stance, anticipating the release of the United States Consumer Price Index, which is of course an inflation data coming up later today, before making any decision at this point in time. And as a result of this, we are noticing a consolidation phase here. As you will see, price action is caught within a range right now, and in fact it's looking more like a flag pattern if we consider the impulsive move that led into the structure here. Now if this is going to be turning out to be a what's it called again, a flag pattern, well, we might be seeing price action drop to the downside. So let me just highlight what things are looking like here. So we have something like this, and then we have this scenario right here. So it's looking more like a flag pattern, if you would ask me, which is a very good signal that price may want to continue the downtrend scenario at this point. But here we still cannot jump into conclusion yet. Now if we take into consideration other factors that are driving the market sentiment behind the scenes, remember there is this belief that the US Central Bank has concluded its tightening policy and could start initiating rate cuts by the first half of 2024. Now the previously bullish momentum in the US dollar may be stalled by this idea which is prevalent in the market, as if there's going to be a rate cut by next year, then there is no sense. It doesn't make any sense buying the US dollar, right? So let's see if this is going to be the case. If that is going to be the case, what are the levels we will be using to guide our decisions? We will be talking about that in a moment. Now, we're also going to be taking into consideration the concerns about the escalating tensions, geopolitical tensions in the Middle East as well, and which usually, this kind of geopolitical tension usually serve as a catalyst for safe haven assets such as the gold. Now, in this kind of situation, if we consider that one too as well, the tendency that buyers could take over this market is still up in the air. Now, how do we intend to capitalize on the next move here? Now, given all this development and all these factors I've taken here, our attention, or let me say our center of focus for today's trading session, will basically be between this range at the $1,991.50 level and the $1,981 area. In fact, I think this is quite okay. So we have a range which we will be using to guide our decisions for today. And in fact, you do know how we do it. Whenever we had such range like this, we want to exercise patience and wait for either the breakout of the range to give us an opportunity to start buying this particular asset, or the breakdown retest of the support line of that range to start considering selling this particular asset. Well, if we look at it from a technical standpoint with a trend continuation pattern on the chart, it is more likely that price action will nosedive to the downside. So personally, I already have a sell stop order below the $1,981 level to capitalize on the downtrend situation. However, considering the downtrend continuation pattern we have here, if we can see something like a breakdown and retest of structure, if I can see a retest of structure, I will just join right away, then have a sell stop order below the $1,981 area, sorry about that, to join the decline to the downside. So we can be able to maximize the potential of that bearish move, having two positions at the time price will break down the 1,981 level. Then remember that we also have the lowest point for this week, which is exactly at the $1,976 area. So you do want to be marking that one out too as well. We could probably be maximizing this bearish momentum again, adding more positions at the breakdown of that $1,976 area. So let's see how the market is going to play out for today. However, in as much as we're looking out for selling opportunities here, if it so happens that price action goes on to break out of the $1,991.50 level, a retest of structure will give me that confidence to join a bullish momentum. And if price continues to climb, a breakout retest of the $2,000 mark will be welcoming more buy positions. Then a further breakout of the highest point for this week, which is situated at the $2,007.50 level, will be welcoming more buy position in this particular market. So you can see Our center of focus today is basically between this range at the $1,991.50 and the $1,981 area. So let's exercise patience and see how the market will be reacting to the structure, and we shall be playing along accordingly. And if you are going to be part of the XAUUSD live window, you're definitely going to be seeing how we will be positioning ourselves for the next move. So I do encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decisions. So these are my views on the XAUUSD for today. So if you have any questions, feel free to let me know in the comment section. So I see your comment here from Kelechi. Kelechi is asking something here. Let me zoom in so that I can see what you're saying. Hold on a second. Okay, it says, should entry after a break and retest be on the 1 hour time frame, or could it be taken from the lower time frame, say 15 minutes? Of course, you can drop to the lower time frame, like the 15 minutes time frame, to capitalize on retest of structure. So once you have a breakout of structure, you wait for price action to come back into the structure that was broken, and if you can see a couple of retests, then you can join that uptrend situation. Yeah, that's how you want to be taking advantage of breakout retest of structure. I hope I answered your question there, Kelechi. All right, so if you have found this content helpful and useful in making your independent trading decisions for today's trading session, I really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much as you do so. Thank you very much for helping in growing this community as well. Then Kelechi asks again, also, is it possible to add the US oil in the live trading like XAUUSD? No, I can't. I'm sorry, I can't. I can only take one asset, XAUUSD. That's all. All right. Thank you very much. So in the absence of no further questions, let me wait for like 5 seconds and see if there are any questions before we round up for today's trading session. Then that reminds me, I dropped the link to the XAUUSD live window right in the comment box. It's pinned at the top of the comment box. You want to be clicking on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who do not know what this is all about, well, the XAUUSD live window was a platform that was born out of popular demand from this community, from members of this community, where we usually come together to monitor real-time price action on the XAUUSD, especially during the New York session. So it usually kickstarts between 5 to 10 minutes into the New York session, and it lasts about 5 to 7 hours depending on the volume of trading activities for that day. So you want to be part of that session to see how we do things real time on the XAUUSD. So I look forward to having you right there. Okay, Kelechi, you're very much welcome. Road to Freedom says perfect answer. Well, I'm not sure I understand where the perfect answer comes from, but I will take that as a compliment. All right, so in the absence of no further questions, I think it's on this note we will be rounding up for today's Forex Morning Mastery. It has been a wonderful moment with you guys. In fact, I really enjoyed the energy this morning as we kept on engaging in the comment section and making this an eventful one. Thank you very much for making it a wonderful moment for everyone in the house here. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you do, you want to be part of our subsequent editions as well. Trust me, the more time you spend with us in this community, the better you will get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you tomorrow, same time. And to round off, I want to advise us here. The week is still very, very early, and I can tell from the response I've been getting in recent times how it could be very daunting, especially when the market is going through a choppy situation. And we all know now, if we don't know why it is, that's a problem. But since we know why the market is choppy, then I think that should be giving us a level of comfort, and then strategically position ourselves for the next move. Now, the market is consolidating basically because of the anticipation of this major event that we are looking forward to this week. We have quite a handful of them from both the United States and the United Kingdom. Remember, we just witnessed the labor sector data from the United Kingdom. We're looking forward to the CPI data from the United States, which is an inflationary pressure measure data from the United States. Then we're looking forward to the interest rate decisions tomorrow from the United States, and then from the Bank of England's interest rate decision coming up 48 hours from now. So all of this is a very good reason why major key players would decide to step aside from the market, waiting for cues into the data before making any informed decision. So in this kind of environment, we need some level of patience to be able to jump into any position. And in fact, if we do enter any positions and it goes against us, it's okay, it's fine. We do know that by the time this event comes in, we are going to be witnessing a significant movement in price action, hereby making us to recoup the loss we incurred. And you can see we've demonstrated this over and over and over again. Where we lost, we were able to recoup the loss we made later on after price action did decide to take a particular direction. So let's take succor in this understanding, and let's see how the market will play out for today. And always remember that every decision we make in the financial market is more or less an educated guess. So you do want to have a well-defined risk management strategy to guide your positions and make sure they are very, very consistent. Now, Muffin here is asking that where is the TP target? Well, I do want to, I've talked about this several times in this community, that I'm trying as much as possible not to be a signal service provider here. Instead, I am here to give you an insight into how price action analysis work and how you can use it to guide your decisions in the New York and London session. Now, your TP target and your stop losses should be at your own discretion. Now, one thing here is that when we talk about risk management with $1,000 account, you can expect. Let me put it like this. I'm just trying to look for the right words. Now, the range of viewers I have here spans between scalpers, day traders, positional traders, swing traders, and the like. So everyone has his or her own preferences. Now, when it comes to this, I'm only helping you and guiding you to see how you want to position yourself for the next move. Now, if you would ask me about your TP target and your stop losses, then I will tell you that we already have levels that we've identified on this chart, which you can use as your stop losses or your TP target. For instance, let me give just an example of what I'm talking about here. Now, for instance, if you are buying, let's say, at the $1,991.50 level, like this case scenario here, your TP target, depending if you are a scalper, day trader, position trader, or swing trader, could be the 1995 level. That's about, let's see how many pips that is. If you are a scalper, maybe you are looking at 40 pips TP target, you can take that move. And if you are probably a swing trader, you might be looking at 160 pips, that is $2,007.50 level. And in fact, if you had watched my video on the XAUUSD, you will see that I identified maximum level point where you can actually use to gauge where you want to have your TP target there. Then for your stop losses, we do have trend lines which we usually use to guide our trading decisions. So your stop losses should be anywhere below the trend lines, depending on whichever direction you are looking at. So I will encourage you to use the levels that we have on this chart to guide your TP target and your stop losses. And in fact, if you need a personal guide, then probably you can contact me one-on-one. Then we can talk about working together on that one. So this is my view there. I hope I answered your question, Muffin. And if you still have any, feel free to let me know in the comment section. So it's on this note, I would like to call it a day here. I really appreciate every single one of you, from Muffin, Road to Freedom, Kelechi, Torres Master, Baladon, Simon, Ronald, Aretabe, Rajabidi, Jonah Aruna. You guys are wonderful. I really, really appreciate you guys. So I wish you best of luck today, and looking forward to seeing you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful day, everyone. Bye-bye.